When you're looking at your home and auto insurance, what are the 3 major mistakes that we see a lot that you need to avoid? I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, so home and auto insurance gets a lot of attention in commercials. Some of my favorite commercials out there, hilarious. Here's the thing, most of them are talking about, all right, here's how you can save money. Here's how you can reduce your premium with specifically your auto insurance. And I'm all for that. But listen, guys, the wrong coverage at a good price is the wrong thing, okay? You've got to have the right coverage at a good price. That's what you're looking for. It's got to start with the right coverage. Think about this, quick analogy. What if you need a pickup truck because, you haul a lot of stuff or for work or whatever, you need a pickup truck, but you're out there looking at vehicles and you like the price of the Ford Focus. Are you going to buy a Ford Focus just because you like that price better? No, what you need is a pickup truck. And yeah, those unfortunately are more expensive, so you got to be wise at your prices there, but you need a pickup truck. Same thing applies with your auto insurance, and it's tricky because name your price tool and 15 minutes can save you whatever, right? There's all sorts of angles where insurance companies are telling you, reduce your price, reduce your price, reduce your price. I don't want you to spend $1 more on your insurance than you absolutely need to. Why? Because too many dollars going towards insurance means too few dollars going towards your financial goals. But here's the thing. Your insurance is there to protect you and your financial life and those financial goals. Therefore, you need to first make sure you get the right amount of coverage. That's why your CFP doing comprehensive financial planning, helping you with your home and auto insurance, at least giving recommendations, even if they don't collaborate with your insurance agent, that's a must. It's a must, okay? Now, beyond that, though, as a certified financial planner that's been analyzing people's home and auto insurance coverages for, my goodness, almost 20 years, what are the most common mistakes that we see? So if you're going out there looking for that right price, how do you make sure you don't get the wrong coverage as well? You got to avoid these 3 mistakes. The first one is most people don't have an umbrella policy. Now, why would you need insurance to protect your umbrellas? Terrible joke. Sorry. That's not actually insurance for umbrellas. It's called an umbrella policy because it covers over the liability of your other policies, okay? An umbrella policy is extra liability insurance above and beyond the underlying liability limits that your home insurance offers and that your auto insurance offers. So, for example, on your auto insurance, if your liability coverage for bodily injury and un- and underinsured motorists is $500,000. Say it's $250,000 per person, $500,000 per accident, both for bodily injury and for your un- and underinsured motorists. If you get $1 million umbrella, that now means you've got $1.5 million. 1.25 and $1.5 million. Your base policy, your auto policy, will pay out the first $250,000 or first $500,000 per person or per accident. And then you've got that $1 million policy for that umbrella policy that will pay out after that. Most people, as they're pursuing financial freedom and building financial wealth, they surpass their overall net worth and their income levels. And when you look at their overall financial exposure, they get past those underlying limits of their homeowner's policy or their auto insurance policy, but they fail to add an umbrella policy, okay? Here's the thing, an umbrella policy is very affordable for $1 million of coverage. You'd think, well, geez, that's, if my underlying policy is $500,000 and I'm going to add $1 million on top of that, then my umbrella policy must be really expensive. It's not. It's manageable, a couple $100 a year, depending on your situation. So we see lots of people, this is the first mistake, as we're analyzing their overall financial life, building that net worth analysis. Their net worth is up in the 1.2, 1.7, $2 million range, and we're looking at their homeowners and their auto owners insurance and no umbrella policy. That's the first mistake that we see all the time. And the second is similar. The second mistake that we see often is gaps in coverage. Gaps in coverage. Now, part of it could be this umbrella policy. Well, I now, because my income has increased a lot or I've been building wealth, I now have a lot of financial exposure, a lot of risk, and my underlying limits are no longer enough. But it's not just with the umbrella policy. What if your underlying limits previously were $100,000 per person, $300,000 per accident, and now your household income is $150,000? Well, that means you've got a lot of financial exposure there. There could be more at risk. Obviously, your at risk is going to be dependent upon the type of accident, but a severe enough accident is going to expose the rest of your financial life, when in fact your insurance is supposed to be there to protect the rest of your financial life. So moving those underlying limits so they're more adequate so that you don't have gaps in coverage. The other one is a gap in coverage with replacing your home or replacing your vehicle if something happens. Now, most auto insurance is actual cash value as opposed to replacement value. That seems to make the most sense. But when you're looking at your home, right now, we've seen home values surge over the past 2 years. And if you haven't updated and looked at your homeowner's policy, you could be looking at right now, well, if my house burns down, or if it gets hit by a tornado, or if I have a significant loss, it's going to cost about $500,000 to replace. And my coverage, dwelling coverage, is only $300,000 because a few years ago it would have only cost $300,000 to replace, right? So if you haven't looked at that coverage, that dwelling coverage, or your replacement cost in the past few years, I'm just going to tell you it's got to be out of date. And now you've got a gap in coverage that you need to correct, okay? So as you're looking at finding insurance at the right price, or even if you're not hunting right now, you've got to take a look and make sure you don't have any gaps in coverage, whether that's on the liability side or whether that's just on your coverage or replacement cost side. And then the final mistake, the third mistake that we see often, very often, and this one directly connects to how much you're paying in premium, and that is you have the wrong deductibles. You have the wrong deductibles. Most people approach deductibles from an emotional standpoint. Well, if you have a loss, how much do you want to pay out? Well, geez, if I have a loss, I don't really want to have to write a big check. I hope the insurance covers as much of it as possible. Therefore, I'm going to keep my deductibles low. You got to think about it differently. How much of that loss could you absorb yourself, and therefore only get the insurance above and beyond what you could financially manage? For most of us then, as you're building financial wealth, you're building up that delayed spending account, you're building up that emergency fund, and you've got resources at your disposal that, gosh, if you get in an accident, I mean, you want to avoid an accident at all costs, right? But if you get in one, yes, a $250 deductible would be nice, but you could technically afford a $1,000 deductible. Well, have you run the numbers recently to see how much premium savings there would be if you moved from that $250 deductible to that $1,000 deductible? Or on your home, from that $1,000 deductible to that $2,500 deductible? Don't look at this just and say, well, I've got enough cash in the bank, so I'll blindly make that change. It might not save you that much money in premium. But you've got to take a look. And right now, if you've been building up cash, on average, households have more cash in the bank right now than they've ever had in history. And I know things are getting more expensive, things are getting tight, things are getting squeezed, but when's the last time you looked at your deductibles that you set for your homeowner's insurance, your auto owner's insurance, and compared that to, okay, what would happen if I got in an accident? How much financially could we afford to cover without pinching ourselves too much? And therefore, what would that do to reduce and manage our premiums? So those are three mistakes that we see often as certified financial planners when we're analyzing someone's home and auto insurance. The big idea is most financial advisors avoid talking about your home and auto insurance. Oh, that's for that expert over there. That's for your farm state or your whatever it is agent. They're going to know about that. Listen, your insurance agent likely doesn't know anything about your overall financial life. So if you were to ask them, well, do I need an umbrella policy? They would have no idea. They don't know how much income you make. They don't know your assets. They might try to sell you something, but they're not looking at an overall comprehensive financial plan. They've got one goal, one objective. You need to be doing comprehensive financial planning, taking those individual areas. Protection planning is one, tax planning is another, investment planning, retirement planning, estate planning, cash flow. You need to look at all of those and not just look at those individual goals, but harmonize those into one goal, one plan so that you're making wise choices in each of those areas. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.